Hey guys, welcome back to the program. We're talking about Roth IRAs today. You know what makes me excited? Not paying taxes. How do you do that? You put money away in a Roth. It grows tax-free, and when you take it out, guess what? It's still tax-free. Best thing we can do. Talking about it next. Firefighter Financial Toolbox. Join me. And we're at the Vanguard website. We're looking at Roth IRAs. Let's take a look. Roth IRAs offer tax-free withdrawals. Why is that important to us? Every penny you withdraw in retirement stays in your pocket, not in Uncle Sam's. That's what I'm talking about, saving taxes. That's what I like. What is a Roth IRA? An IRA is an individual retirement account. And these offer tax-free growth and tax-free withdrawals in retirement. There are some rules, of course, but rules dictate as long as you've had the account for 5 years with money in it, and you're at least 59 and a half when you take the money out, all the money you take out won't owe any federal taxes. Other advantages: no RMDs. RMDs are required minimum distributions. If you have a normal IRA, when you turn 70 and a half, you have to start taking a certain amount out each year. And it depends. There's a whole formula that says that if you're this old and you have this much, you multiply this factor by whatever, and it gives you a number you have to take out. Even if you don't need it, you have to take it out. What does that mean? You have to pay taxes on it. Don't have to do that with a Roth. Also, there's no age limit to stop contributing. On a normal IRA, when you turn 70 and a half, even if you're still working, you can't give any more money to it. So that's an advantage. If you, for example, you have a 401k at work. If you contribute to that, there may be a limit on being able to make a traditional IRA contribution and make it tax deductible. With this, there is no limit, except for there are some things to think about. A, you never get a tax break when you put the money in, because the money goes in after tax, so you've already paid the tax on it. It's your money, but you don't get that upfront tax savings like you do on a traditional IRA. Let's look at some contribution limits for this year. Okay, I've disappeared from the screen, but I'm still here. Let's talk about, okay, there I am, I'm back. Oh, now I'm gone. All right, let's make sure we don't do that again. Okay, there we are. Sorry about that. All right, contribution limits. Now, there are some limits on how much money you can put into this thing. The annual limit may seem small, but combined with the tax break and compounding, your savings can add up significantly over time. What is compounding? Compounding interest is you make money on the money you made making money. All right, let's talk about a Roth IRA. If we started putting $6,000 in each year starting in 2019 and continued to contribute $6,000 each year, at 5 years we would have $46,000. At 10 years, we would have grown to $106,800. After 15 years, our money would have grown to almost $195,000. And after 20 years, our money would have grown to a total of $324,500. That is amazing. All right, so let's look at the contribution limits for 2018 and 19. This is 2019 now, so if you're under age 50, you can contribute $6,000. Pretty good. If you're 50 and older, this is my first year as a 50-year-old, you can contribute $7,000. You can never contribute more than you've earned in the year. So what does that mean? Remember, this has to be made with earned income. If you didn't have a job and you didn't work and earn any income, you are not eligible to fund an IRA of any kind. But here's an interesting fact that some people didn't know. Let's say I work, but my spouse doesn't work. As long as I made enough to cover both of our contributions, so at least in my case we made $14,000, $7,000 for me and $7,000 for my wife, I can contribute the full amount for both of us and get that tax-free growth. Now, there are a couple other things to think about. There's some income limits that go along with this. We're going to move to that page. So your compensation counts. You can make too much money to be eligible to do a standard contribution to a Roth. And the phase out ranges are here. If you look, if you're single for 2019, you start the phase out at 122,000 and you are totally ineligible after 137,000. If you're married filed jointly, it's 193,000 with the total phase out at 203,000. And if you're married filing separately, don't do that for taxes, people. You totally phased out at $10,000, so it makes a big difference. Now there are some ways around it. There's some backdoor tricks, but that's for another video at this time. What if your income? Let's see. Your income, does your income qualify? Let's take a look at what the IRS says qualifies and what doesn't. Okay, we're going to leave Vanguard site. Looks like we're going to the IRS. Okay, amounts contribute, and that's what we saw. So let's take a look. Okay. Well, if you are in the phase out limit, I recommend you talk to a tax professional so you don't mess it up, because nobody wants to pay taxes on money that's supposed to be tax free. So let's go ahead and close out of this. And we're going to go back to the website, Vanguard site, and let's pretend that we're 20 to 49. Let's talk about where to start. Come to the right place, find a retirement account for you. So IRAs for most people are the way to go. Simple because they are either tax deferred or tax free. The difference being tax deferred means usually the money will go into an account before you pay taxes on it. Or in the case of a traditional IRA, it's money that you have paid taxes on, but you actually get a tax credit when you put it in. And that's up to the amount of the contribution based on your salary. And there are limits on that as well. As we said, the Roth IRA goes in after taxes and it is not taxed. If you max those out, consider a taxable account. Taxable account is money that you're going to pay taxes going in and you're going to pay taxes while it's growing. So better to start with the Roth IRA. So let's go ahead and close out of this. All right, you guys, we're done. We talked a lot about the Roth IRA today. I hope you guys enjoyed the show. I hope you are going to join me in the future. I want you to subscribe to the channel, like the video, and if you have any comments, please put them down below. I'll link some things to the Vanguard website in there, so if you guys are interested, you can go for some good low-cost options for a good Roth IRA. Come and join me again on the Firefighter Financial Toolbox. Have a good day.